6 months ago, we were told that 21 Capital was going to dominate the Bitcoin treasury space and try to rival Michael Saylor's growing Bitcoin monopoly. However, we woke up this morning to the news that Jack Mallers was leaving the second largest Bitcoin treasury company. This unexpected exit opens up many interesting questions.
Do you have any other questions for me, counselor?
There's 1.2 million Bitcoin held in public treasury companies. Does one of the most influential names in Bitcoin leaving change the thesis? Or does it strengthen Michael Saylor's 840,000 Bitcoin monopoly? Welcome back to Satoshi. Let's get into it. Before I get into it, smash the like button, hit the subscribe, and share this with a Bitcoiner who needs to hear the news today. Okay, big news just dropped. Jack Mallers, one of the most important figures in the Bitcoin space, is exiting his CEO position at 21 Capital, the second largest Bitcoin treasury company in the world. People don't just typically leave these positions, so it's actually a really big deal. But the question remains, what does this mean for the Bitcoin treasury space? And did this just signal that Michael Saylor and strategy have full spectrum dominance of the Bitcoin treasury play? My question is, if Michael Saylor has been the only one with bags deep enough to withstand the volatility of this bear market by holding Bitcoin alone, does Jack leaving 21 mean that Saylor won? And I want to be careful here because one implies that the game is over, and believe me, it's far from over. But let's look at what Jack actually had to say.
Hey everyone, I have decided to step down as the CEO of 21 Capital. I wanted to tell you that myself in my own words because you deserve to hear it from me directly. When I helped start 21, I thought we had an opportunity to build something very specific. Not only a company built on Bitcoin, not only a company built with Bitcoin on its balance sheet, but also a company with Bitcoin businesses producing cash flow built alongside of it. That was the vision that I believed in. That is still the vision that I believe in. However, over time, it became clear that the board and I did not agree on the path toward building for that vision. Not in bad faith, not because anyone was wrong. The people involved in 21 are immensely talented and committed to what they believe. But sometimes people can look at the same opportunity and arrive at different conclusions as to how to build it. And that's okay. But something had to change. And ultimately, I made the decision to step down as the CEO and exit myself from the business. Now, I do not say that lightly. People believed in 21. People invested in 21. People believed in me specifically as its CEO. I understand that responsibility. I feel the weight of that responsibility. I know some people will be disappointed by this outcome. This was certainly not the vision that I had when I started the business as to how this story would end. Now, with all of that being said, and as hard as walking away from 21 has been, I know that it is both the honest and the right thing to do. It's the right thing for 21, the company. It's the right thing for its shareholders. It's the right thing for Bitcoiners, and it's the right thing for me. This experience in making this decision has brought me back to questions that matter the most. Like, why has Bitcoin been my life's mission for the last 14 years? What do I want to build? Who am I building for? And maybe the simplest but most important thing that I learned through all of this is that I'm at my best and my heart is most full and I'm able to contribute to the Bitcoin story most fully when I pour my energy and my blood, my sweat, my tears into building tools for Bitcoin and Bitcoiners. Period. That simple. I want to be building for the person stacking sats, for the small to medium-sized business that's starting their own Bitcoin treasury, for the hodler, for those of you at conferences that run up to me and say, Jack, it was a podcast you recorded, or it was Strike that finally got myself or my family or my friends to understand Bitcoin, to get off zero. The person that's worked their whole life to accumulate savings and now wants those savings to be protected in Bitcoin. Those are the people that I want to spend my life building for. And to me, that's what Strike is. Bitcoin has a weird way of forcing clarity on you. It tests what you really believe. It challenges who you really are, where you may be weak, and it makes you confront what actually matters, especially when the answer can no longer be theoretical. And this experience has done that for me. I have never believed in Bitcoin more than I do today. I have never been more energized to build for Bitcoiners more than I am right now. I know the type of leader that I am and that I want to be. I know the type of business that Strike is and that I want to build. And I know the type of world that I think is worth building for. My life's work remains Bitcoin. The home and where I do that work remains Strike. I know what I'm building, and I know who I'm building it for, and I know why it matters. So thank you for your support this far. This story is far from over. In fact, in many ways, it's just getting started. So with that, I wish 21 and the team nothing but the best. And I am back to work, working on Bitcoin for Bitcoiners at Strike. Take care.
He didn't say that 21 failed. He didn't say the vision was wrong. He said this experience gave him clarity. And honestly, that's completely valid because Jack Mallers built Strike from nothing into one of the most important Bitcoin payment companies on the planet. That is his identity. That is what he knows how to do. And I think that somewhere in between press releases and the board meetings and the SPAC filings, he remembered that. Now, let's talk about the replies to this tweet because they're exactly what you'd expect given the nature of how split the Bitcoin community seems to be these days. Half of Bitcoin Twitter is celebrating, builders back building, Jack is where he belongs, Strike to the moon, and then there's the other half, the people who bought 21 stock and feel completely quote-unquote rugged, which is understandable as well because the stock did take a hit during this bear market, and now the guy whose name was the whole pitch to some people is gone. Mallers has responded to critics on X, one reply saying, "I resigned voluntarily and I'm not going anywhere. Strike has never been stronger. We've somehow continued growing this bear market while remaining a profitable leader in Bitcoin financial services. If anything, this gives me more time to do what I love. I'm just getting started." And again, I totally get why people are mad, especially in the middle of a bear market, but here's my honest take. If you bought a stock because of a personality figure, then you were always taking on more risk than you thought. And Jack leaving doesn't really change what Bitcoin does, but it does change what 21 does. And here's why.
You know, people who are pioneering have to be misunderstood for a long time and be okay with it.
Sure.
As you say, was your chest hair on volatility? Same with being misunderstood. What would be things that people misunderstand about your business right now? Obviously, you're a Bitcoin company. You clarified that. What are some of the misunderstandings that you believe quickly will be, eliminated?
So the focus as a Bitcoin company, I think, is fundamentally different than a Coinbase or a Robinhood or a Kraken, because these businesses are monetizing speculation. Mm-hmm. Speculation in an environment where the currency is constantly being debased is a great business, because whether we all know it or not, everyone is a speculator if they are printing the money that you own. And so allowing people to speculate, all these companies, they're going to arrive at the same place. Equity speculation, crypto speculation, prediction market speculation, they're going to arrive at the ultimate place to go speculate once your paycheck hits. As a Bitcoin company, we're building the future financial services that we think society lands on in this new era post whatever this fiat experiment is right now. So we are not building a speculative world. We're not going to list any other tokens. We're not going to get into any of the noise. We fundamentally believe that the opportunity of our time is Bitcoin, and someone has to focus on it and harness it. And there's no better group than Tether and I. And so we, as a financial services firm, we're actually building tools and products to make people's lives better with Bitcoin, as opposed to speculation. And again, there's nothing wrong with one or the other, but we are categorically different in that way. And I think the market will have to truly digest and appreciate the size and scale and muscle that a SoftBank, Tether, our leadership group, and that level of focus on probably the biggest financial opportunity of our lifetime.
So let me fill in the picture a little bit. CoinDesk broke the full story yesterday, and there's a lot more here than just Jack stepping down. Tether, the controlling shareholder of 21, had a plan earlier this year to merge 3 companies into one listed entity: 21 Capital, Strike, and a Bitcoin mining company called Electron Energy. The idea was to put Bitcoin treasury, Bitcoin payments, and Bitcoin mining all under one roof. That plan is now done. Strike is staying independent, the merger is off, and Tether has named Rafael Zaguri the new CEO of 21. And here's where it gets interesting, because Zaguri is also the founder of Electron Energy, the mining operation that was supposed to be part of that merger. So even though the three-way merger is officially off the table, the man now in charge of 21 is the same person who built the mining operation that was supposed to be part of it. Electron, if you don't know, is not a small operation. As of April 2026, 46 exahashes per second of acquired hash rate potential, 620 megawatts of available power capacity. That is serious infrastructure. And according to their press release, Electron is, quote, recognized as one of the largest and most efficient Bitcoin operating businesses in the world. And 21's stated new strategy under Zaguri: acquiring operating businesses, expanding capital market capabilities, and developing Bitcoin-backed lending. Read that carefully. They're pivoting away from a pure Bitcoin holding model towards a company that generates revenue. That is a meaningful strategic shift, and it tells you something important about what the pure treasury model looks like in a bear market. Here's what 21's pivot actually underscores if you're a Bitcoiner. The only position that doesn't require a business model to justify is the one that you hold yourself. Not in a fund, not in an SPAC, but in your own wallet with your own keys. The Bitcoin Way helps you get there. Free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. First mover advantage in this model is not just about having more Bitcoin, it's about having built the financial infrastructure, the debt capacity, the premium, the market trust that lets you keep buying through the downturns without being forced to sell. The bear market has been brutal on everybody, but especially on every company that tried to copy that model. Look at the company Nakamoto, which peaked at a $24 billion market cap and is now down 99%. They actually had to sell Bitcoin just to fund operations. Nakamoto, the company literally built to hold Bitcoin forever, couldn't hold Bitcoin through this bear market. And that's what happens when you replicate the idea without the infrastructure that Saylor spent years building. 21 is now restructuring away from the pure treasury model entirely. Meanwhile, Strategy holds 843,775 Bitcoin and has not meaningfully reduced its position. The model is, by all measures, holding. The copycats aren't dead, but the bear market is proving that this model requires more than an announcement and an SPAC. It requires what Saylor actually built, and that took years, which is very reflective of the regular person who holds Bitcoin. We didn't just get lucky. This has taken years. This is what long-term holding looks like in traditional finance. And if you watch this show, you know what we're about: freedom of speech, moving Bitcoin forward, owning your own money, and not asking permission. The Rumble wallet is built for exactly that. They just launched their new wallet, and the setup is very simple. Head over to wallet.rumble.com/simply and use code simply10 to get $10 free today. Self-sovereign, self-custody, and it supports the platforms and creators who actually stand for something. Go grab your $10 at wallet.rumble.com/simply, code simply10. Here's my opinion, but I'm just a girl, so what do I know? I do think this situation confirms that in a fiat-based system, holding Bitcoin is simply not enough. CEOs are always going to be beholden to shareholders, public opinion, earnings. Bitcoin isn't necessarily in a place where it can play these short-term games, and Mahler's doesn't seem to be in a position where he's willing to adhere to the demands of traditional finance. Michael Saylor is building the reserve asset thesis. Jack Mahler's is building the payments network thesis. These are not competing ideas necessarily. These are just two different belts on two different parts of what Bitcoin becomes. This is part of Bitcoin adoption. The reason that this moment feels like one guy is losing is because we're in a bear market, and it feels like, frankly, we're all losing. But at the end of the day, we all know that the only thing that's losing value is the dollar. So just keep stacking. Thanks for watching Simply Bitcoin's Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below because I read them all. Follow me on X at Internet Sophie, and as always, stack, slay, and stay bullish, baby. But wait, before you go, I want to give a shout out to Bitcoin Well, the cleanest, simplest on-ramp to self-custody Bitcoin that I know of. When you buy through Bitcoin Well, your Bitcoin goes straight to your wallet, not theirs, not a custodian's, yours from the very first transaction. It's available in the US and Canada, non-custodial by design, over 50,000 users publicly traded in Canada. You can set up recurring buys so that you're just stacking automatically without watching the price every day. Sign up at bitcoinwell.com/simplybtc, and I'll catch you on the next one.